Hello everyone, this is CA Reshma Jain here. Today we'll continue with the PGBP chapter. So let's start with what is WDV. Suppose it's a first year. So what will be the WDV first year of asset purchased? Asset purchased will be the actual cost of asset will be the WDV. Now asset is acquired in the previous year, before the previous year. Then cost of asset minus all the depreciation will be the WDV. In case of block of assets, what will be the WDV? In case of block of assets, we have already discussed, we have to determine WDV in the format provided. Depreciation provided in books accounts deemed to be depreciation actually allowed. What happens is, in case of depreciation provided in books of accounts will be depreciation actually allowed. While in calculating P&L, we are having depreciation, right? We are claiming depreciation. And in cost of asset also, we are subtracting depreciation. So, depreciation provided in books of accounts deemed to be depreciation actually allowed. These both depreciation should be same. See, suppose taking in this case also there is some separate situation where suppose there is a exemption for a particular business, okay, on which there was no tax, no income from PGBP, hence we are not required to compute their income. Now the exemption is withdrawn, so how will they compute the depreciation? Now this is provided here. The actual cost of an asset has to be adjusted by revaluation of such asset in the books of accounts. So revaluation should be done. The total amount of depreciation on such asset provided in the books of accounts of SSC in respect of such previous year. See, as per income tax, there will not be any depreciation, but books of accounts should be maintained. No, in books of accounts they should provide depreciation in respect of such previous year or preceding year. The previous year relevant to the assessment year under consideration shall be deemed to be the depreciation actually allowed under income tax for the purpose of section 43(6). The depreciation actually allowed as above has to be adjusted by the amount of depreciation attributable to such revaluation. So depreciation on such revaluation should also be adjusted, and we have to maintain books of account as if we are subtracting the depreciation, and we need to calculate the WDV. Composite income. Composite income means, for example, say tea, coffee, rubber. What will happen in such cases? Only a certain percentage is agricultural income and certain percentage is business income. For example, in tea, 40% is business income and 60% is agricultural income. In such a case, how depreciation will be allowed? Taking this example, if the turnover is 20 lakh, depreciation is 1 lakh and other expenses are 4 lakh, then the income would be 15 lakh and business income will amount to 40%, which is 6 lakh. In this case, 1 lakh will be the amount of depreciation deemed to have been actually allowed. So depreciation will be as if the entire income is from PGBP. Accordingly, WDV is required to be computed by deducting full depreciation attributable to the composite income, that is 1 lakh. Entire 1 lakh need to be taken for considering WDV. Cases where WDV is nil. When the WDV will be nil? When all the assets are transferred or the sale price is more than the actual cost, scrap value, and the WDV at the beginning of the year, then WDV will become nil. Carry forward and set off of depreciation is discussed. What is the order of set off? Current year depreciation, brought forward business loss, unabsorbed depreciation. Unabsorbed depreciation can be carried forward infinite years. It can be adjusted against different head of incomes except salary in the current year. building machinery, plant, furniture not exclusively used for business purpose, then proportionate amount, fair proportionate part, which the assessing officer may determine having regard to use of such a set may be used. Proportionate amount can be used to for the business purpose. Balancing charge is already discussed. Now we'll move on to the next section, section 35. Expenditure on scientific research. Whenever we are doing any specified business, we'll get the benefit of 100% of deductions on the certain expenses. Now, what happens if we have taken a scientific research in-house? We are ourselves doing scientific research. We would have incurred some revenue expense or some capital expense. Capital expense should be other than the acquisition of land. Capital expense should be other than the acquisition of land. What will happen? We can get benefit for 3 years immediately preceding the year of commencement. We can get the benefit of deduction like payment of salary, material or input for such scientific research. Capital expenditure incurred during 3 years immediately preceding the year of commencement of business would also be allowed as deduction in the year of commencement of business. What if we have hired someone for doing the scientific research outside us? Then to whom we have hired, we have contributed to Indian Company for Scientific Research, notified approved University College Research Association, other institution for social science or statistical research or for scientific research, approved national laboratory IIT, specified person for scientific research undertaken under an approved program. The above deduction will be available under the normal provisions of the Act only. Now what happens is, if such capital expenditure, it should be other than acquisition of any land, goodwill or financial instrument is incurred during the previous year, it will be 100% deduction will be allowed from the business income. That is during that year itself. If he has incurred, 100% deduction will be allowed. If before the commencement of if the capital expenditure is during that year itself it will be allowed in the previous year. If it is before the commencement of the operation, capital expenditure, 100% would be allowed as deduction from the business income in during the previous year in which the assessee commences the business. Deduction will only be allowed if such capital expenditure is capitalized. Now, what are all the specified operations? What are all the specified business? Laying and operating across country natural gas or crude or petroleum oil pipeline network for distribution storage facility being an integral part of such network. Setting up operating warehouse facility for storing agriculture produce, cold chain facilities for specified products, building operating 2-star hotel or above, building and operating hospital with 100 beds, at least 100 beds per patient, slum housing project for slum redevelopment or rehabilitation framed by CG or SG, housing project for affordable housing framed by central government or state government, fertilizer in a new plant in a newly installed capacity, setting up and operating inland container depot, beekeeping and production of honey and bee wax, warehouse facility for storage of sugar, operating slurry pipeline of iron ore, semiconductor wafer fabrication manufacturing unit, or operating a new infrastructure facility. Other conditions: payment should be made if about 10,000 through bank. No deduction under Chapter 6 or 10 AA will be allowed. Assessee should use the asset should be used only for specified business. If such asset is used for any other business, then such asset less depreciation allowable under Section 32 would be deemed to be the income of the assessee in the previous year in which it has violated. Amortization of preliminary expenses. Examples: amortization of preliminary expenses. Examples of preliminary expenses are expenses which, when we are commencing any company, we meet certain expenses, right? Such expenses, or we are going for an extension or issuing some shares or debentures at that time. Such preliminary expenses, how it can be allowed as deduction. So for example of such preliminary expenses are preparation of project report, feasibility report, feasibility, market survey, engineering service, legal charges, drafting document, drafting of MOA, AOA, registration fees, company fees, issue of share and debenture, underwriting commission, brokerage and charges for drafting, printing, advertisement of the prospectus. So is it applicable for all? It is applicable for Indian companies and resident non-corporate SSC, for new business and for extension of existing business till the extension is completed. What will be the amount? 5% of the cost of project in case of resident non-corporate SSC, and 5% of cost of project, or 5% of capital employed, whichever is higher. The amount of deduction will be 1/5 it will be allowed in 5 equal installment. 1/5 of the qualifying amount for for each 5 successive years. Now here for preliminary expenses, what is cost of project? Cost of project is expenses incurred before the commencement of business, like actual cost of fixed assets, land, buildings, leasehold, plant, machinery, furniture, fittings, railway sidings, including expenditure on development of land and buildings, which are shown in the books as on last day of the previous year in which business of the SSC commences. Last day of the previous year. Then expenses incurred for extension of business of setting up new MIT. All these assets last day of the previous year in which extension of the undertaking is completed. In what is capital employed? Capital employed is aggregate of issued share capital, debentures, long-term borrowings as on last day of the previous year in which business of the company commences, or in case of extension, last day of the previous year in which such undertaking is completed. So what we have seen, first we have seen expenditure on scientific research will be allowed as deduction, and then expenditure deduction in respect of specified business, and amortization of preliminary expenses. Here what happens is, the business loss of 35 AD of one business can also be adjusted against the business loss of 35 AD of another business, though they are not eligible. Those they are eligible, but they are not claiming 35 AD as well. For example, suppose a business of cold chain facilities can and has a business of operating hotel of 2-star or above category. It is registered for 35 AD, but this is not registered. Still, it can claim the business loss and set off it.